Hello and welcome to an FX Times daily market recap. I'm CMS Forex market analyst Nick Nassad. Today is Monday, November 16, 2009. The dollar was weaker today and fell against most of its major rivals, the euro, the British pound, the yen, Swiss franc, and Australian dollar, and as well as other higher yielding currencies, as we had some better than expected economic data from Asia, which helped to fuel optimism about global growth, and that sent stocks and commodity prices higher, which we know helps risk appetite and is usually bearish for the greenback. In the euro-dollar pair here, we saw the euro extend its rally from Friday's trading and eventually move above the 1.50 level late New York trading. We did have a sort of spike down here in favor of the greenback following Ben Bernanke's speech in which he said that quote, "Our commitment to our dual objectives, together with the underlying strength of the U.S. economy, will help ensure that the dollar is strong and a source of global financial stability." So the fact that he actually mentioned the dollar gave some investors perhaps the thought that he was signaling that the Fed might do something in order to strengthen the dollar, as in raise rates. But then the rest of his speech, he seemed to reiterate a lot of the points we've been hearing from the FOMC, and pretty much that they would keep the ultra-loose monetary policy for some time to come. So that move down in favor of the greenback was paired rather quickly, and like I said, we moved above the 150 level around 2:30 p.m. Eastern Time. Today's high matched up rather well with a line of resistance we had seen last week around the 150.10 level. As you can see that we've tested this level several times, and now we're doing it again in today's trading. We also had a break of a downward sloping trend line right at the beginning of this week's trading, as we did have some pretty good data from Japan and its GDP. We did see the greenback move the euro-dollar pair move back into this sort of consolidation zone we saw for most of today's trading, around the 149.70 area, and that is where we look to end today's global session. Let's take a look at our key fundamental releases from today. As I said, Japan posted its gross domestic product for the third quarter, and the preliminary reading showed the economy expanding 1.2%, a figure that was better than the forecast of a 0.7% increase. On the year, growth was up 4.8%. The interesting thing to note here is that most of the gains were driven by a rebound in domestic demand, as well as an increase in capital investment and a good boost in exports. Though the increase was better than expected, the Bank of Japan is still likely to keep its accommodative monetary policy, but it does help to boost the prospects for global growth, especially as we've seen rather good data from China recently, and we saw places like the Eurozone come out of its recession in the third quarter. In the US, retail sales for October were up 1.4%, a figure that beat forecasts, though most of the gains were led by auto sales, and if you take retail sales and you exclude auto sales, the increase was only 0.2%. Also, the figure for September was revised downward. Originally, September's figure was negative 1.5%, but now that was revised down to negative 2.3%. So this is a bit of a mixed bag, but I'm sure the headline figure will be the thing that helped to propel stocks upward in today's trading. It also shows that auto sales have bounced back following the slump in September, which was a result of the end of the Cash for Clunkers program in August. In two more releases from the US, we saw the Empire Manufacturing Index for November decline to 23.5, which is still in expansionary territory, but it means that activity grew by less than it did in November when it was at 34.6. November's figure disappointed forecasts. We also saw business inventories drop 0.4%, a figure that was lower than the 0.8% drop expected. This was for a September period. Usually when inventories are run down, that means that firms will have to place new orders, and that helps growth in the future. So a smaller rundown of business inventories will mean that there will be less of those orders. So the reason that September saw this smaller than expected decline was that there was less car sales, and as a result of the Cash for Clunkers program ending. And so therefore there was more stock of cars at U.S. Dealers. Some of those fundamentals out of the way, let's take a look at some more market highlights. Here we have the pound-dollar pair with 1-hour candles, and we see a rather strong surge in favor of the pound. We were able to reach the 1.6875 level. That is the highest the pound has been since August, and just as we had with the euro-dollar pair, we saw a break of a downward sloping resistance trend line, and that propelled the pound higher from a technical standpoint. Last week we saw a very important support here hold around 1.6510, and we've moved almost 350 pips from low to high since then. We did fall back down from there, and now we're trading right around our high from last week around 168.30. So we'll see if the pound has more strength to go in the upcoming session, or if perhaps we see a correction to this 2.5 session rally. The pound strength extended to the euro-pound pair as we saw the pound gaining and breaking below the 0.89 level. That's important because we've been in this sort of consolidation zone with the 0.8920 level acting as support several times, though we did dip below it once in the past. Pretty much all of October we've seen the support hold. So now we've dropped below it again, and we've even moved below our lowest point in November, though we did rebound back to that level as of 4 p.m. Eastern. The theme of the day, however, was greenback weakness, and in the dollar-yen pair we had a break of support that had set up also from the beginning of November. If we connected our low here with our low from November 11th, and around the 89.30 level is where we had a break in today's trading. That low is now testing our October 14th low, and we can see that this rally by the greenback has now been completely wiped out. The Australian dollar, meanwhile, extended its rally from Friday, reaching just above 0.94, which is an almost 16-month high for this pair. The Australian dollar and other commodity pairs were definitely boosted by a jump in oil and gold prices. Oil rose $2.50 to almost $79 a barrel, while gold hit above $1,140 an ounce. So risk appetite is definitely in the air, which is going to pressure the greenback going forward in this week if that sentiment continues. Now let's take a look at some of our upcoming releases. Tonight we're going to have Japan posting its Tertiary Industry Activity Index, which is a measure of services activity. Overnight, Switzerland posts its retail sales, the UK posts its consumer prices, and the Eurozone will reveal its trade balance. Tomorrow we have 3 releases from the US: Producer Prices, Industrial Production, and NAHB Housing Market Index. Those 3 fundamental indicators will give us a look at inflation, manufacturing, and the housing sectors, so they could have an effect on the currency markets. And that'll do it for today's market recap. For more videos and analysis, please visit our site at fxtimes.com. Thank you for watching, and happy trading.